Amazon out with its second quarter earnings, shares rising after beating on the top and bottom line. The company also topped estimates for operating income and delivering optimistic guidance. Joining us now is Rohit Kulkarni, Roth MKM Managing Director. Rohit, we are seeing shares rising in after hours on the back of these results. So what's the big takeaway for you?
Clean beat and raise numbers. Fundamentals are better than expected. Amazon coming above their high end of the guidance, and 3Q outlook being kind of the low end of 3Q outlook is above the street. So this is as emphatic a beat and as emphatic a raise that we have seen in from Amazon in probably 18 months. So, and the big other takeaway is AWS. The cloud growth has stabilized. That's what they have said in the letter. And that means we are seeing an inflection in cloud growth from Q2 to Q3. I believe the moment people start to digest an inflection, that's when the stock goes even higher.
Rohit, I want to ask you, when it comes to when you get on the earnings call, what are you looking to hear with regard to the path and trajectory for AWS growth?
I think what we would love to hear is two things. One is how is AI contribution towards AWS kind of trending? Microsoft gave somewhat of a glass half empty kind of situation there where AI contribution started to decline for them. If Amazon provides extra color about how AI and AWS are going hand in hand, I think that should help the stock and the sentiment. And second, I think they're already talking in the letter that AWS has stabilized. So how high can AWS growth go in the near term, given the year-on-year comps are easier in August and September? I think any extra color around that, I think those two data points on AWS would definitely help with the sentiment. The third point is Prime Day. Prime Day was the biggest Prime Day they have had in the history. Obviously, we see that in the numbers. We see that in the 3Q guide. But just generally how they see the state of the consumer, state of buying patterns of consumers, trend in the rest of Q3 is kind of assumptions around that would also help.
Rohit, there are a lot of concerns about the AWS growth going into these results, particularly on the back of what we heard from Microsoft as well as Alphabet. A lot of companies pulling back some of those investments. You know, I've heard you say many times now that growth, at least in the cloud, has stabilized, but it certainly feels like the outlook is a little more positive for Amazon in this space. What is AWS getting right?
In my opinion, AWS has been working on a complete full stack AI offering, which is they have their AWS AI chips, which is for your large language model training and inferencing. They have their own chips that they have probably, I would say, anywhere between 3 to 5 year lead versus Microsoft and Google. They have been working on that over the last 5 years. And on top of that, I think AWS probably has the best data offering across all cloud vendors. So think about the first thing that anyone wants to do with the AI in the cloud. You want to get all your data into the cloud. There is a gravity of data, and that data gravity helps AWS because they have probably the best database offerings, the best data warehouse offerings across all cloud vendors.
And Rohit, shares of Amazon are up more than 50% year to date. How high are you expecting this stock to go this year?
Again, Amazon is our number one mega cap pick, is what we have published for second half and probably heading into 24. In my opinion, I think we are at couple of inflection points at Amazon. The first inflection point is obviously AWS, which we see. The second one, which we are yet to see, is our margins in North America and international retail. I think that's still work in progress, but after having cleaned up their act around fulfillment, around logistics, around hiring, 6 quarters in a row, their employee headcount has declined. That not a single company has done that in the last 6 quarters in a row. So as we start to see, as we get to Q4, we should start to see retail margins ramp up, and that brings the stock higher even more from where we are right now. Obviously, our price target here is 155, but we see that grind higher given where the numbers will shake out after tonight.
Rohit, we have seen a big push from the company to increase third-party sellers, and we're seeing third-party seller services net sales coming through from there at $32.3 billion, about an 18% growth year on year. How much higher how big of a driver do you expect that to be when you think about the ad dollars coming in from there?
I think it's a fantastic virtuous cycle that Amazon has figured out between their fulfillment by Amazon, the Prime offering, and their third-party seller offering, as well as advertising. So once sellers are onboarded, you are on the fulfillment by Amazon offering, and then you are also in the advertising thing. So I feel they are taking away share from larger advertising companies, say like for example Google and Facebook, and plus they are taking away share from smaller e-commerce providers. So in my opinion, this is still something that based on their kind of three pillars of e-commerce, which is advertising on Amazon, fulfillment by Amazon, and obviously the Prime. That creates a moat that probably we are not going to see that break anytime in the near future. Plus, again, they have a new CEO on Amazon.com, Doug Harrington. I think what he's been saying is that decentralized fulfillment centers has created the best and the fastest fulfillment network that has ever existed on planet Earth. So what that means is the moment you start to get that speed of delivery, the speed of convenience, I think yeah, it's hard for we are on the cusp of the next kind of big unlocking of shareholder value for Amazon, and I think we have just started.
Rohit Kulkarni, Roth MKM Managing Director. Appreciate you hopping on today. Good to talk to you.